Hello, this is the Chartprofit video. 2.5 hours into the session on Friday, 20th of November. I'm going to start by looking at the E-mini S&P, looking here at a 30-minute distribution for the E-mini back over a good few months. The major point of control is at 2094. That's this level here. You can also see on this distribution back over the last 12 months that the value area low here comes in just below 2000, and that was briefly minutes tested and rejected recently. And noting this level here, which we can see on the daily chart here, even clearer, is currently being tested, or has been tested today here. That's 2094. The level below here is 2063, which is the controlling price of the minor current distribution. So this looks to me as though we have obviously resistance here. If we see price printing time above this level, that would be an indication of real strength. Price back below 2063 would indicate weakness. So we'll continue to monitor how the E-mini performs and prints relative to these two levels going into next week. Looking here at the daily breadth chart for the New York market through yesterday, Thursday, the percentage of stocks on my New York list above their 50-day moving average. That number itself is currently above 50, which is a positive sign. This indicator above here, which is the 5-day moving average and the net new highs 25 indicator, is below 0, so that gives us a neutral here on the breadth, this grey area. So we're not really confirmed here on the breadth or currently on the price momentum, which has been heading lower. We said back here when the four major stock index ETFs, when their price oscillator or momentum started heading down, we talked about the strong likelihood of these indicators getting back to 0, which we've now done. So we're waiting for this price momentum indicator to turn back up. You can see a very similar picture on the Nasdaq daily breadth indicators, where the percentage of stocks greater than their 50-day moving average is again above 50, but these two indicators at the top here not actually confirm strength. This from last week's ebook. You can see the charts out of date here. This is from the ebook on Monday, last Monday, and the time resistance I've noted here on the spider chart, similar kind of equivalent level to the E-mini 209.90. That's the major controlling price here. We've called it time resistance. And following the sharp sell-off last week, this week we've seen a rally back. This is the live chart back to that level, and that's where we've tested at the end of this week. So again, it's what happens next relative to that level that's important. Here's the Russell 2000 ETF, IWM. Major point of control at 115.35. We're finishing the week here above that level. The halfway point from the high this year to the subsequent low comes in here, and that's the next level resistance for IWM. We've noted previously how the UK, this is the FTSE 100, has been lagging. We've come back this week a little, but the resistance level up here, this halfway point, which is from the high this year to the low, the obvious level. This is a good chart. We can see how this obvious resistance has been proven here, here, and here. I'm not happy about this chart from the long side until we see some price printing up here. German DAX doing a little better. Here's the halfway point. We're printing above that level. As we know, the major point of control is down here, and we double bottomed on this level, which is a powerful pattern. And just recently this chart has come alive, and as long as we hold above this level, German index is in a strong price location. And if we're viewing strength in terms of where the index is relative to these halfway points, the Nikkei is in a pretty strong position here. We'll look at bonds. In the pre-open I've been talking about IEF, the 7 to 10 year ETF. This is a good chart to monitor for the following reason. It recently found support at its major point of control at 105, which is here on the live chart, so that's good support. I've made this note for a couple of months now. Price below this level is weak. That will be down here. There's some overhead resistance, the halfway point here, and just above that an 18-month time resistance. Price in here would be pretty bullish for bonds, I think. We'll look at commodities. This is copper futures monthly chart. This is a chart I showed over a week ago as the futures printed a new 6-year low. And we've been saying with this chart, this long-term chart, with copper printing below its halfway point here, very weak location in the long term. And as we broke to that low below the August low here, we've seen further weakness, and we're on the low here today. This is cash gold, broke below the July low to a new low here this week. Just rallied the last couple of days, but price below this July low is weak, really weak price location down here. And this is crude futures here, looking at oil. Here's the August low here, and we've said last webcast that price below this halfway point off that low potentially sets up a retest of this level. We're just a little lower than we were this time last week, but not much of a bounce as yet. Just before we look at the Forex to finish, we'll quickly look at the sentiment indicators. This in the public poll from AAII this week. Bulls percent this week was lower at 30.8, and bears percent was higher at 30.5. That's quite a jump in the percentage bears this week from 23% to 30.5. So the net, that's the bulls minus bears at 0.3, that's a 7-week low. This tiny little histogram bar here close to 0. And I think this indicator is offering much useful information at the moment, pretty much neutral. Similar situation with the Investors Intelligence poll. Last useful indication from this was when the 4-week moving average of net got below 0, which was here at the low in price. Active money managers exposure index gave a similar contrarian signal at the low as it has done in the past. I've mentioned before it tends to be more useful at extreme over bearish levels, indicating market lows, rather than when the index gets relatively high. It just tends to get a bit muddled up here. 4-week flow number on the Lipper US fund flow again gave an overly bearish signal, contrarian bullish signal in September, and then came back to hit a multi-month high late October, and that number has just fallen off in the last couple of weeks. My version of the Ridex assets ratio early last week, reached 8.41, which was a 57-day high. It has now fallen back from there to 6.62. So there's a recent level in the ratio above 8, which was the highest level since August. And this is the level here that we reached yesterday. You can see as the S&P has moved higher this week. Generally we've seen this indicator move lower. And that's largely due to the bear fund assets that I'm looking at here in isolation, moving pretty quickly higher in the last couple of days. But even so, if we look here at the bull fund assets, they've also moved higher. Obviously not as much relative to the bear funds because the ratio has actually fallen. But the bull fund assets nevertheless reached this week, yesterday, its highest level, or their highest level this year, which is kind of interesting. In fact, just for this chart, just for this indicator, there's very few readings higher than the current one. In fact, you can see them all in here. We've looked at the weakness in the commodities, and here we can see the opposite, on the inverse side of that picture, with the strength in the US dollar index. This high, important high to this subsequent low, gives us this halfway point, which, as we said previously, was a resistance, and then we built this little pattern above that point. Consolidation above those halfway points, usually a strong pattern, and we're now moved higher for the dollar. It's overbought, but it looks like it wants to test that previous high back earlier in the year. This is the pound dollar. Said before, there is lots of overhead resistance up here, various important levels. Off this low here to this high over here, we have this halfway point to work with. It's difficult to look at the long side of this chart currently if it's printing below that halfway point, even more so. So I'm currently not trying to call this chart at all. Look at a similar level on the Euro FX chart from this low to this high. Gives us this halfway point. We said here this is a weak little consolidation below that halfway. We've come weaker. I definitely don't want to look at the long side of this chart. Looking at the weakness in this pattern, we could easily see a retest here of the low. Aussie dollar also in a longer term weak price location below this level. Spot 76, which is the major point of control, which had previously back here earlier in the year provided support. Off the September low, we're actually printing above that halfway, and the European currencies look weaker against the dollar than this chart currently. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.